Bhatia of Kotak is also waiting to join us now. Sandeep, good morning. We were just discussing whether the favored set in the market of 15, 17 stocks can continue to become more and more expensive. What's the feedback you get from your clients?
I think there's clearly resistance to buy the same names at higher prices all the time. I think this is clearly a very shallow market with not many alternatives which make sense. We just recently upgraded Idea to a buy today morning from an ad. We have always liked the name. If you take a 2-year view, I think this is a business which will show significant upside from earnings, from current expectations of earnings, primarily on the back that I think the domestic Indian fundamentals are improving. And more importantly, there is a new driver in terms of data revenues which is emerging. So we like that name. It's run up as everyone can see. But I think the numbers which will come, quarterly numbers on 1st August. And if you take a slightly longer term view of around 2 years, you will see a huge play coming through in data. Idea is therefore the cleanest India story that you can buy. And we think that the price could move up to 180.
What do you do with Reliance? I mean, how did you guys read those numbers? Their reaction, the first reaction doesn't seem to have been great.
Well, we upgraded Reliance before the run, so we have captured some of the upside which the stock showed. Right now, I think we see the price target in the region of 980 to 1000, so it needs to take a bit of a breather. But honestly, with this kind of market, you really are grappling for ideas which are making sense both in terms of earnings, both in terms of the fact there's a weak rupee environment, so Reliance is a beneficiary here, and the valuations are not completely out of the ballpark. Reliance clearly fits all these three criteria. So for large investors, this has been a stock where most of them have been underweight. So from current levels, it's still a hold for us, and it may take some time before it makes the next move, but we still remain positively inclined on it.
When you talk to clients, Sandeep, are you getting the sense that that complete rout in terms of sentiment on emerging markets is behind us, or is it just a reprieve? People are making some trading gains over here, but the mood or the stance is essentially negative on EMs?
I don't think the negative sentiment on EM will go away in a hurry. I think we have been warning for a long time that when the reversal of the quantitative easing starts, it will be painful for India and the other emerging market countries, especially those which run large current account deficits. Clearly, that sentiment and that fundamental will not go away. India has a long way to go to sort its macro imbalances, and as far as I can see, India will continue to remain under pressure. So I think this is just a trading reprieve, nothing else.
Would you say that for the rupee as well, Sandeep? I mean, are precarious funding for the current account deficit, do you think that will open up pressures for the rupee again after this respite?
I think the current rupee fall has let off a lot of steam, so I think it should hold at current levels right now. We are seeing a lot of action from the RBI, even if that is at the cost of some short-term sacrifice on growth. We've seen the RBI move. I expect the finance ministry to make further announcements. So I think there is clearly a move to hold the rupee at current levels. Let's hope that holds, because a falling rupee is not good news for anybody, especially the banking system.
Will people need to make big adjustments on their bank portfolios, you think, Sandeep, in terms of exposure to this space? And are equity market participants, sort of coming around to the view that there could be some rate hardening action soon?
It's difficult to say whether there will be a rate increase, but I think the tight liquidity conditions will remain. It's going to be something which will play out, especially in the next 6 months. If we can hold the rupee level right now and the equity markets holds up with some good luck, I think we are in a much better position. If there's another disruption, clearly in the equity markets or in the debt markets, then there will be pressures coming through on the currency. So the way I see it, stabilize the currency. We have issues on the macro which need urgent action from both the RBI and the FinMin. RBI has always done its bit. continues to do its bit. So let's hope FinMin chips in. All said and done, I think right now one has to wait and see how growth comes through. We think growth will come under pressure in the first half of the year. Let's see if the monsoon helps growth to pick up in the second half. But the clear casualty will be public sector banks. I think most of the lenders are from the public sector bank space to the infrastructure and other businesses which have seen high leverage build up over the last 4 to 5 years. So I would remain cautious on the public sector banking space, despite the pressures we have seen on private sector banks in the last 2 weeks or so. That is a much better managed space in the banking sector.
What are you telling your clients to do on HUL after last week's surprise move?
I think most people are really, surprised by the strength of the move. I could have expected 610, 620, but reaching 700 levels is clearly a big surprise. It's clearly a combination of the fact that everyone's seeking safety and there's a lot of stock which has gone out of circulation. So right now we maintain our cautious stance on levers. We are not pushing people to buy at these levels.
IOC's issue is coming up and it could be a large issue, maybe $700–800 million. Do you see a lot of appetite from global clients on this name?
No, yes, I would think definitely there would be interest. It's difficult to comment on specific issues, but yes, I wouldn't expect too much trouble there.
How are people beginning to approach IT now, Sandeep, where the mother market, i.e. the US, is actually showing signs of recovery, so volume growth may pick up, but that's getting balanced off with this big concern about the immigration bill. Are you guys turning incrementally positive on IT, or is it still a neutral kind of position?
Well, we have had a positive bias towards IT. Clearly, the combination of weak rupee and improving US fundamentals helped the sector. The orang on the immigration bill will not go away, but we don't expect the worst outcomes to come through. I think there will be watering down of the proposals. Eventually, it's something which will hurt both the US and India if immigration is tightened up unduly. So I expect some kind of a watering down of the provisions. Clearly, there's a protectionist mood back in the US. So this is something which as the economy lifts in the US, will probably start diluting itself, which is a good thing. So this is a longer term process. I would expect more than 6 months that this process will go on. In the near term, I think valuations for IT companies are good. We like Infosys and TCS both. Infosys has a potential to surprise with a lot of costs and inefficiencies currently built in. It carries one of the highest bench. So expectations are running high for the new management, but I think there's also scope to surprise.
About